It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, September 30th, 2015. Squeezing out the last few drops. End of the first quarter. End of this amazing, volatile month of September. We get October starting tomorrow. I can't believe we're already talking about the 10th month of 2015. Don't forget, we are in the sweet spot for volume and volatility right now. September, October, November, December, January, February, and the first 2 weeks of March. That's our sweet spot for day traders. So you asked for volatility. We got that volatility. A very, very volatile month comes to an end here, the month of September. We have a jam-packed newsletter in store for you kids today. Crude oil, range bound with a bullish bias after a very volatile inventory session today. Crude oil, we'll be looking for buying opportunities at the lows of the range tomorrow. How about the S&P? The E-mini is range bound. Long-term bearish bias on the S&P, but very bullish going into this evening. But we're seeing some very clear signs that these bulls are quickly losing momentum on the S&P after a very bullish session today. We're looking for some failures on the S&P coming back down tomorrow. How about the gold? The yellow metal is bearish, bearish, bearish. We completed a measured move today. We have a channel overshoot telling us to stay patient for a measured correction higher. That's right. I said higher on gold for tomorrow before we see that next selling opportunity this week. We got a good plan for you guys on the yellow metal here before we finish up today. And of course on the euro, the 6E. Range bound, now trading down at the lows of the range. So we're looking for a bullish move back up to a phantom trend line, right? We get a phantom trend line and a spike in channel correction in the euro. We have a plan for all you euro traders going into Thursday's session. As you can see, we got a lot to cover today. Before we jump into our nightly newsletter charts for this evening, I do want to remind you folks, make sure you're watching this video on our trading blog here at Sideways Markets. If you're watching it on our YouTube channel, it's wonderful. A lot of great videos on our channel. I think you might be interested, though, in coming over here to Sideways Markets. There is a link in the description of the YouTube video. Come on over here to Sideways Markets for the following reasons. First of all, if you're not a member of School of Trade, I'd love to give you a free pass. Come out and test drive our live trade room as a guest, upper left-hand corner, lower left-hand corner, right above my ugly mug. We have a nightly newsletter mailing list. Every evening, right before I post my newsletter, I'll send you an email. All I need is your name and your email address. And then I need you to verify your email, so make sure you check your inbox. I'm going to send you a verification email to make sure you give me approval and to verify you've got the right email address. Then, of course, right below the video for tonight, how nice is that, right? You can download all the charts you'll see in tonight's video right below the video on our blog. And then over on the right-hand side, you can join our trial membership. It's not the same as your free pass. And, of course, read member reviews, get more information about membership. And we always have someone standing by 24/7, 365 to give you guys a hand. I can't believe we're going into October already, but I got to finish up the month of September 1st. Let's jump into this newsletter here for this evening. It's been an incredible week here. Hope you guys are doing well with us. Let's start out with that crude oil, the black gold here, the CL. We're on the 11:15 contract. Crude oil is range bound with a bullish bias this evening after we finished the third quarter of 2015 with an incredibly volatile session. It was inventory day. I mean, what did you expect, right? It was a very classic inventory day, though. All the way up, all the way down, all the way up, all the way back down. Now, we can see the trading range. This is a different trading range than earlier on this week, kids. I'm sorry to make you do some more work here. I know, I had to update the range. As you can see, the range has shifted just a little bit higher. If you remember from last night's newsletter, we had a very balanced volume profile. Well, now that volume profile is definitely shifting higher, so we're definitely feeling the bulls grab control here right now. Will it last? Well, we're going to find out. We can see a trading range, a new trading range today, and a bull channel on the chart, which means we'll be looking for buying opportunities at the lows of the range. Now, the most important thing right now that I want to bring up is this channel. There are two very easy clues on this chart. One is the range, two is the channel. Now, whenever you see a market that is this well behaved inside of a range, right? You see what happens, right? We rotate from the low to the high, back to the low, back to the high, back to the low, back to the high, back to the low again. And of course, we're expecting a range rotation back up. That is a very well behaved, right? It clearly went to, what do they call it? The school where they teach you how to, anyways. Back to my point. Whenever you see a trading range, be very careful about putting too much emphasis on a channel. We have a channel here, right? That channel is the channel you really got to be suspicious of. So when we're in a very clear range, you want to discount the validity of this channel. So you'll notice in my notes up here, I didn't say to buy the lows of the channel. That's really not, honestly, you could remove the channel from this chart, but it does line up nicely. You even got a little undershoot of the high, a little overshoot of the low, right? Little okey doke, right? From the buyers and sellers using this channel. But again, focus on the trading range. So our plan is to look for range rotation and buying opportunities down at support. The ideal scenario would be if we don't go higher, we expect to see rotation and then look to buy that low, right? What you want to do is you want to buy the low of the range. If we happen to break down, there is going to be a measured correction lower here, possibly. Okay, it all depends where we go overnight. That's another place we're looking to buy here. So as this price goes lower, I'm going to be looking for sellers to fail so I can buy that low, right? As it goes lower, you're looking for buyer failure to get long. Seller failure to get long. As it goes higher, you'll look for buyer failure to get short. So we definitely have a bullish bias going into this trading range. I'm expecting range rotation. I'm very much discounting the channel, but you'll also expect channel rotation, and that gives us a nice little tasty target overhead. We got channel rotation and a measured move target. So here's the ideal. The ideal scenario is give me a chance to buy this low. That's the ideal scenario. If we happen to just tumble here right now, I've got my buyer failure target all the way down to the low of day, and then really it's that 44.06, that 44. That's really where your ultimate long-term failure target will be. I don't think we're going to get that tomorrow, but hey, tomorrow's the first of the month, first of the fourth quarter. If I had to guess tomorrow could be a nice, big, strong trending day. You know, we just finished talking about how the third quarter finished off pretty dismal for a lot of people in the asset management firms. So there might be a little bit of a bullish tone coming in tomorrow. It's difficult to tell. I'm going to take a look at this just like you guys will. We definitely have volume, though, pushed higher here. So we definitely have a little bit of a volume spike here to the upside right now. Again, measured moves give you some nice targets. Trading range is the most important thing. If we do go lower, that's going to be an undershoot of that range high, undershoot of the range low, right? So again, buy that low, stay patient. What you're going to look for down at these lows is look for the sellers to try to sell, fail, and that's going to be your best buying opportunity going into the session on Thursday. I can't believe we're already Thursday this week on crude. How about, speaking of the bulls and bears, how about some S&P? The E-mini S&P is range bound with an overall bearish bias. Don't forget, we do have a long-term bearish bias. Do not suffer from amnesia. This is exactly what we said earlier this week. Spike in channel down. Remember this from earlier this week? Right? Spike in channel down. What did we say earlier this week? Expect a correction back up to, well, wouldn't you know, back up to the beginning of the channel. Right? Remember this? You guys are experts on spiking channels now, right? You guys are professionals of this stuff now. Bear, spike, and channel. Where's the correction going to go? Correction's back to the beginning of the channel. Failure is back to the beginning of the spike. So here we go. Measured correction. That's what I mean when I say measured correction, right? A, B, C, D. And then, of course, right back down. What are we looking for to sell up here? What's the plan to sell? Buyer failure, right? After you see a correction, what you want to look for is those buyers trying once, twice, can't get it going, sell right to their stops. So we're right there, right? We are right there at this point. So the S&P is range bound. Overall, we're range bound here. As you can see, the range levels, again, very well behaved, very well behaved. What is the name of that school? Somebody post me a comment below the video. What is the name of the school that you go to that teaches you how to be well-mannered? I'm drawing a blank. I never draw a blank this long. It's killing me right now. You know, I keep wanting to say boarding school. It's not boarding school. They teach you how to do other things. But somebody will help me out on this. What is the name of that school where they teach, little boys and little girls how to be polite? The salad fork is here. What is the name of that? Somebody must have gone to it, right? I think it's a little bit older than my generation. I don't think they send kids away to those anymore. Anyways, back to planet Earth, though. It's going to kill me here. Somebody will post that comment on the YouTube channel, and I hope you're laughing at me right now because I'm laughing at me too. Okay. I got to have some fun with you guys. All work and no play makes JJ a great trader, I guess, right? Anyways, let's keep going. So we got the bear spiking channel down. You know I love you guys. I would miss you guys doing this hard work every day here on the newsletter. As you can tell, I really have fun with it. So bear spiking channel down. Here we are. We've got the correction, right? We've got those bears all interested now, right? Now they're all moistened up here, ready to go again. And, of course, now we have, well, let's keep reading because it's all in the text, right? The English language is very powerful. But today was extremely bullish. Today was extremely bullish. Why do I say that? Why was the day extremely bullish? Hello? Did you open the chart today? If you looked at the chart as of 8 o'clock this morning, I mean, it just, look at this. Straight up, right into a spiking channel. And usually you don't get a very strong, this thing corrected. This is a model spike and channel right here. Spike up, channel up, look where it corrected, right? Back to the beginning of the channel, and then bam, right back up. Okay, so we do have a measured move. That is waiting in the wings right now, up around 1921. And I'm telling you, this thing is like, 180 handles off the high from the third quarter. I honestly wouldn't be surprised if we see just a rip your face off bull day tomorrow. But that's a guess. It really is a guess. I'm going to trade the chart like everybody else, right? But I'm telling you right now, don't be surprised if tomorrow is a statement type of first of the fourth quarter. It definitely could be. It definitely could be. Today, if you were day trading the S&P today was some of the hardest price action we've seen all year. If you don't know what I'm talking about, you need to get educated, because today was a day filled with traps. If you made any mistake today and you try to get a little bit too loosey-goosey with the risk, you paid for it dearly. We had a great session on it, especially on crude today. But the S&P was a very good example of a market that was going to send you home crying if you didn't pay close attention. If it didn't close above the moving average, you shouldn't have gone anywhere behind it today. It was that difficult. It was ultimately just a classic end of the quarter, end of the month, kind of rub it in your face type of day today. I'm sure a lot of folks had a difficult time with the S&P today. I saw it as being one of the most challenging environments we've seen in the ES in quite some time. That, again, is why I could easily, again, I'm just speculating, but I wouldn't be surprised at all tomorrow if tomorrow is just a tear your face off type of day. And that's why I do mention this bullishness, and you do have a measured move as well as a larger bull channel. So this day was extremely bullish. But wait a second, though. You smell that? I can smell some smoke. I can smell there are fumes billowing out of the engine of these buyers right now in the form of an undershoot of that channel. Right? Now, here's what I'm looking at. Again, I've got a major bear bias. We just corrected all the way back. Right? Think what you want to think right now, but we just finished, right, like I said, enticing the bears back in again with a correction. That's the clue number one. We're ready to go lower now. We also have the spike in channel that ran out of gas. It did. It ran out of gas. Now, whether or not they're going to fill the tank back up and do it tomorrow, I don't know enough yet. But the way it looks right now, If this thing was that strong, why did we sputter out right here at 1910? Why didn't we? See what I'm saying? You see what I'm saying? You smell what I'm stepping in? Okay, so again, this is where we're starting to see some, well, I don't know. All right, so now we have to get the proof. Okay, very bullish day, but I'm talking undershoot of this channel. If it was really that bullish, we should have finished at least at its highs today, right? We shouldn't have seen this kind of easing off the gas pedal, right? Maybe it was the end of the quarter. I don't know. All I know is that right now we have potential for an undershoot of that channel high. So here's what you want to be looking for tomorrow. I'm looking for a lower high here and a measured correction back down before we even get that next potential buy up. So in my opinion, these buyers they're struggling right now unless they put something together here. Again, the sellers that got short earlier this week, they're now just getting enticed back in again. Okay, they're now just getting enticed back in again. We've got the original trading range from this week that we were unable to get and stay inside of. Another clue, the undershoot of that channel high. That really is the big one in my opinion. Now what I'm expecting is a measured correction, A, B, C, D, before we even think about being a bull. Now here's the other scenario. The other scenario is I look like a fool and we just push right higher. If we push right off higher, that is your sign from the bulls saying, don't listen to that moron JJ. He was just speculating. We are still firmly in control right now. Okay? I'm going to give the buyers a lot of credit. They really look good today. But again, they look good to a fault. They put us right back where we expected this thing to go here from earlier on this week. Now you got to prove it to me, buyers. Get above the moving average and stay above the moving average. Give me a new higher high. Show me you can get above 1907. Prove it to me. This is what we always talk about in my trade room. If we're in a trending market, prove it to me. Because if we're in a trending market, there's going to be plenty of room to get in before, right? To get in later on in the session. I don't need to be the first person long right here. I don't need to be there. I can wait for proof and then buy a pullback later on in the process. Sure, I'm going to make a little bit less money, but I'm going to save myself a whole lot of pain and suffering if I'm wrong. Okay, so if the buyers fail, you know where we're going. We're going back to that 1886, and then from there, this is where it gets fun, kids. This is where it gets fun. If I had to guess right now, I would say back to the high of the range, 1886. And then if we're lucky, we get the buyers to fail here and a tumble all the way back to where we came from. A full spike in channel failure puts us back at 1872, 1867 area for the mañana. I can't wait to see, after such a volatile day today, after a bunch of clues we see on this chart, how can you not be anxious to see what this looks like tomorrow? If this doesn't get you excited, guys, you're watching the wrong webinar right now, the wrong video right now. All right, let's keep going. You know me. We'll be trading the S&P tomorrow. Trade room, chat room. Very, very much excited to see where we go tomorrow. How about some gold? Now, I got to be honest. I wasn't expecting to see gold really tumble this hard. I was expecting to see a little bit of bullishness. The bulls were like, they were nowhere to be found. They were nowhere to be found this week. Nothing but strength. And this is what you call a bearish market right now. Forget about whatever the chart is telling you. Look at the moving average. Every time we go up, it pulls me back down. Every time we try to go up, it pulls me back down. We didn't even get above the moving average until the end of Globex today on gold, right? And when you look at the clues here, it's very easy to see why. Let's read the text. Let's take a moment to read. Gold is bearish with a measured move and a channel undershoot. Measured move, A, B, C, D, almost to the tick, right? Almost to the tick. Profit taking now will come into play. Bargain hunting now will come into play. And then, of course, you've got this bear channel down. This bear channel is a little bit too predictable. I'm not sure how much I rely on that bear channel. The measured move is more important to me, if you ask my opinion. These really long-term bear channels, real long-term channels you should always be very suspicious about, because you'll notice, we undershoot the high, undershoot the low. We are getting range rotation. We are getting rotation. It's just, in typical gold fashion, it's being a little bit unpredictable right now. Gold, out of all the markets we've seen in the last 2 years, gold has definitely been the most challenging by a long shot. It's very illiquid. It's very jumpy. It feels like a market that's trying to battle the fear of interest rates being hiked back up again. That's what it feels like, right? Thank you, Yellen. I appreciate that, right? Call me this weekend, by the way. I haven't heard from you last time. Anyways, so gold is bearish, measured move down, and a channel undershoot. This channel undershoot at these lows, that tells me now, combine that with this measured move, all right? Can't keep going lower forever, but it definitely can. So, this undershoot, we may finish the rotation. Right now, we're trying to get the rotation down to that channel low. If we don't get the rotation, though, you can definitely expect an overshoot back at the high, a measured correction, before we even get a chance to get a good selling opportunity to go back up here. And then what you're looking for is, you're looking for buyer failure up around those highs. That's really what you're looking for here, right, on the yellow metal. Once we go up to the highs, then you got buyer failure, okay? So we're looking for a measured correction, A, B, C, D. I did my best on those, on the A, B, C, D here. I don't know where it's going to be yet, but just be patient, wait for a measured correction going higher, right? If we don't hit the low of that channel, remember, the channel undershoots a clue, the measured move's a clue, we may just trap in some sellers down here and then make the correction back higher. So stay patient on this. The bottom line is, if you're trying to sell this market right now, where were you on Monday or Tuesday? You missed it. You missed it. It's not the end of the world, though. Because the beautiful thing about being a day trader is that just hang on for a second. You'll get another shot, but don't do it here. This is not the place, not on my account, not on your account, all right? Do it in simulation, but geez, this is not the place to be doing it. You wanted to be selling up here, right? Up here before you get down to that measured move. Now it's time to let the sellers take their profit, let the buyers have the ball for a little while, and then we're going to look for those buyer failures after that correction back higher. Measured correction, it'll be a measured undershoot, overshoot, and then buyer failure to sell it back down. Guys, we are bearish on this gold as long as we stay below the 1127.5. If you're a member of mine, this is what you call a rotational environment, right? We saw the buyers try to rotate it higher and it slammed right back to the lows. That's a rotational environment, and so we know here, as long as we stay underneath that beginning of the week range, we're bearish here. Look for buyer failures after the correction. And again, be very careful being a seller right now until after we get that correction here on gold. And then shall we wrap it up here? I think that's a good idea. I've been flapping my gums a little bit too long. I'm sure you guys are ready for me to finish it up as well. Let's finish it up here on the euro. The euro is range bound and trading at the lows of the range this evening. So we're looking for a bullish move back up to the phantom trend line. Here's that phantom trend line that we always love to talk about here, right? It's a channel inside of a range. You already know you should be suspicious of that. So we can see the major bear channel, which should not be effective at holding the buyers back from retesting the highs. But today's bearish spike in channel tells us to watch closely around that phantom trend line before looking to buy back to 1231 on our way back to the range rotation. So here's what should happen. Okay, here's what should happen. Trading range. And we talked about this on crude. When you find a finishing school, that's the name of it. Ah, brilliant. It's called finishing school. So I knew I would remember it. I had to get the old mind working over there. I got a headache trying to think so hard after that. Finishing school, kids. Finishing school. As you can tell, I was not privileged enough to go to finishing school. Yeah, I went to school of hard knocks, right? The school of hard labor. All right, so back to the plan here. Yes, I'm so proud of myself. Remember that name. Finishing school. I'm never going to forget that until next time. Anyways, we can see here that's your trading range, right? Okay, so that's the most important thing on this chart right now. Range rotation from the low up to the high. I have so much fun on these newsletters. Down to that low, and then now, of course, back up to the high. Okay, that's the ideal scenario, and we call that range rotation. So where are we right now? We're expecting to rotate back to the high. We'll also expect, if price goes lower, to look for a chance to fade the breakout and buy the low, right? That's why we have that fade the breakout area there at 1142, right? All that is, by the way, is just halfway between the 50. It's kind of a 25% range level. That's all it is. Nothing special, right? Okay. So 1142, another place here. But bottom line is whether we go up higher here now or we go lower, seller failure, and then buy, we're looking bullish. Then you've got this bear channel. And there are two channels in this chart. You've got the major bear channel, which again, just like I said for crude, you've got to be careful with these channels inside of ranges. They should not be trusted. That's why I call this a phantom trend line, because it's a trend line that smart traders are going to wait to fail to be able to buy right into the stop losses of those poor, unsuspecting sellers. Now, if it was just a phantom trend line, I would say, okay, I'm not worried about that at all. Look to buy the break of that phantom trend line. But we have one more thing here. Spike and channel. And of course, we are experts on the old spike and channel now, so we expect price to correct back to the beginning of the channel before the next leg down. So that's enough right there by itself, because you got to respect the spike and channel. You really do. It's a very strong clue. I'll tell you, this really has been the year of the spike and channel, right? It's a volatile strength pattern. So here's what I recommend for tomorrow. We definitely expect this price to rotate higher, whether it be now or whether it be after a fake break of that low. The question I have is what happens at this range between the 1231 and the 1248. So what I'm going to be looking for is I'm going to be waiting for seller failure to make sure we get a clear break and a blatant failure from those sellers. I don't want to get too aggressive there because it's going to be a slippery area with those sellers re-entering after that spike in channel. All right, guys, if I happen to be wrong about the bullishness here, right, if we happen to see this low hold, we have some targets waiting for us here for range rotation, right? Take this trading range, copy and paste it down, and that gives you a rotation target down to 1053. We also have a 50% target of that range rotation down at 1113, right? So halfway down, 1113, next leg down, 1053. Now you have some failure targets ready to go. How do we do? Give me some feedback. Give me some comments. Thank goodness I finally figured out finishing school. I know, I'm a goofball sometimes. It's late in the day. I'm running on fumes here right now. Hope you guys had a great day out there. We're having a fantastic week in our trade room. It's been a fantastic week on our newsletter, and an incredible month of September comes around the corner. We've got October tomorrow morning, the beginning of the fourth quarter. This is go time. If you're a big hedge fund guy or gal, if you're an asset manager, this is your last chance to dot your I's and cross your T's as you finish up the year for your clients' performance reports. There's going to be a lot more volume entering the market the next few months, so be ready to take your money out of this market here with me. Don't forget, grab your free pass, share this information with a friend, and if you got some free time, don't forget, I take a lot of pride in the fact that we have built up the best free trial in the business. We've been doing this longer than anybody else on the interwebs out here at School of Trade, and I'll put my money where my mouth is. You'll learn more with me on my free trial than anywhere else you will on the internet. We have beginner, intermediate, and advanced levels of membership, and I've always got someone standing by 24/7, 365 to answer your questions. Guys and gals, thanks so much for being here. My name is Joseph. I hope you had a great month of September. Non-farm payrolls on Friday. I'm going to give you guys another one tomorrow. I'm opening up the trade room tomorrow morning at 8 a.m. and then back here for our final newsletter of the week tomorrow at 8 p.m. Eastern Time. Adios, amigos. Bye-bye for now.